Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 167, recorded on May 18th, 2025. This podcast is for entertainment only and is not investing advice. Do your own homework. We are at block height 897,286. Moscow time is 9:47. Fees are 4, 5, and 6. We'll start with the market news update outlook, get into the weekly top Bitcoin news, check out this week's featured post on the Bitcoin Fortress Substack, do a little look ahead on some upcoming Bitcoin Fortress Substack articles, and we'll finish up with a shout out. So, with that, let's get right into it. Wall Street on Friday notched its best week in over a month, with sentiment almost single handedly being lifted by a surprise US and China trade deal. On Monday, the world's two largest economies reached an agreement under which they agreed to significantly reduce their extremely high tariff rates against each other. Investors cheered the move, and the belief is that there will be further de-escalation in trade. The benchmark S&P 500 index has turned positive for the year, ending a wild journey sparked by US President Donald Trump's Liberation Day tariffs announcement on April 2nd. There was a host of economic data as well this week, with a benign April consumer inflation report grabbing attention. The earnings season also continued to chug along, with Cisco and Walmart being the major companies that reported their results. For the week, the S&P 500 advanced 5.3%, while the tech-heavy Nasdaq Composite climbed 7.2%. The blue chip Dow added 3.4%. Looking ahead, Wall Street's hectic pace eases up this week as we head towards summer. So far, investors have issued the sell in May, go away advice, with the S&P 500 up 6% month to date. There will still be plenty of earnings reports to digest, including Home Depot, which should afford more insight into the impact of tariffs. Other major earnings include Palo Alto Networks, Medtronic, Snowflake, Intuit, and Workday. On the economic front, April new and existing home sales will likely have the most market moving impact. Jumping into Bitcoin news, this is the Hodler's Digest for May 11th through the 17th from Cointelegraph. Here are the top stories. Bitcoin has two strong tailwinds that will help propel it to seven digits in a few years, according to former BitMEX CEO Arthur Hayes. For Hayes, shifting capital controls worldwide and U.S. Treasury devaluation means that Bitcoin will become the go-to safety net for investors everywhere. He summarized foreign capital repatriation and the devaluation of the gargantuan stock of U.S. Treasuries will be the two catalysts that will power Bitcoin to $1 million sometime between now and 2028. A federal judge sentenced Eric Council Jr., who participated in posting a fake announcement on the U.S. Securities and Exchange Commission's X account, saying it would approve spot Bitcoin ETFs, to 14 months in prison. Following a May 16th hearing on the U.S. District Court for the District of Columbia, the Justice Department announced that Council would serve 14 months in prison after pleading guilty to one count of conspiracy to commit aggravated identity theft, and access device fraud. Schemes of this nature threaten the health and integrity of our market system, said Janine Pirro, interim U.S. Attorney for the District of Columbia. SIM swap schemes threaten the financial security of average citizens, financial institutions, and government agencies. UFC fighter turned Irish political hopeful Conor McGregor has endorsed the idea of building a Bitcoin reserve in his country to give more power back to the people. Crypto in its origin was founded to give power back to the people. An Irish Bitcoin strategic reserve will give power to the people's money, McGregor wrote to X on May 9th. The former UFC champion said he would discuss his plans in more detail in an upcoming X Spaces, prompting responses from some of the Bitcoin industry's most prominent leaders. Coinbase stock dipped after news broke of a cyber attack that exposed customer data and an ongoing U.S. Securities and Exchange Commission investigation over misstated user numbers in 2021. The double whammy of bad news rattled investors as company stock Coin slid 7% in a fall to $244 in after hours trading on May 15th, according to Google Finance. Coinbase has since confirmed the report from the New York Times, which stated the SEC has been investigating whether Coinbase misstated its user numbers in past disclosures, an inquiry that began during the Biden administration and has continued under the Trump administration. A report from enterprise-grade digital assets platform Fireblocks shows that 90% of institutional players are using or exploring the use of stablecoins in their operations. The report, published May 15th, surveyed 295 executives across traditional banks, financial institutions, fintech companies, and payment gateways. Almost half of the respondents, 49%, said they already use stablecoins in payments, while 23% are conducting pilot tests and another 18% are in the planning stage. Only 10% of institutions surveyed said they were undecided about stablecoin adoption. Let's see here if there's anything else interesting. As cryptocurrency gains in popularity and price, some criminals are taking to violent measures to steal funds from high-profile crypto holders. Jameson Lopp's GitHub repository, which logs such incidents, has recorded 22 $5 wrench attacks on crypto holders in 2025 alone. The moniker comes from the crude and violent methods perpetrators use to compel crypto holders to hand over their bags. In many cases, local law enforcement can intervene before anyone is harmed and funds are lost, but there is a growing trend of increasingly violent and successful attacks, some of which have resulted in permanent harm and even death. The most recent incident in Paris, France, compelled the French Ministry of the Interior to hold a meeting to address the rising trend. That's why it's probably not a good idea to let a lot of people know that you've got Bitcoin. A man from Wellington, the capital city of New Zealand, has been arrested in connection with an FBI-led investigation into a global cryptocurrency fraud operation that allegedly stole 450 million New Zealand dollars or $265 million US. According to New Zealand police, the man is one of 13 individuals charged after authorities executed search warrants across Auckland, Wellington, and California over the past 3 days. The charges stem from allegations that members of an organized criminal group manipulated 7 victims to obtain large amounts of cryptocurrency, which was then laundered through multiple platforms between March and August 2024. Deepfake assisted hackers are now targeting U.S. federal and state officials by masquerading as senior U.S. officials in the latest brazen phishing campaign to steal sensitive data. The bad actors have been operating since April using deepfake voice messages and text messages to masquerade as senior government officials and establish rapport with victims, the FBI said in a May 15th warning. If you receive a message claiming to be from a senior U.S. official, do not assume it is authentic, the agency said. If U.S. officials' accounts are compromised, the scam could become far worse because hackers can then target other government officials or their associates and contacts by using the trusted contact information they obtain, the FBI said. Let's see. Will Bitcoin serve the unbanked or just the mega rich? Asks Sky Wee. Bitcoin doesn't need Wall Street, but Wall Street needs Bitcoin. Binance Wallet is crushing the competition and ruining airdrops, Chinese firm approved for RWAs in Hong Kong. And that about wraps up the Hodler's Digest. Moving on. This is the weekly market update for May 15th, 2025 from Gemini. Let's see what's cooking over here. Bitcoin pushes to $105,000 before pulling back. The price of Bitcoin increased to almost $105,000 in Tuesday afternoon, closing in on a previous all-time high of around $109,000 hit earlier this year, after the latest inflation data was roughly in line with the Federal Reserve's annual 2% inflation target. Congress is still working on a stablecoin bill. Senators on both sides of the aisle have continued to iron out their remaining disagreements with the Genius Act, a bill that offers a regulatory framework for stablecoins. The hope is that they pass it before the Memorial Day recess. 21 Capital kicks off expected Bitcoin buying spree. Just weeks after launching with backing from Tether, Cantor Fitzgerald, and SoftBank, the Bitcoin Treasury company used Tether to acquire 4,812 Bitcoin worth approximately $458.7 million this week. Coinbase added to S&P 500. The world's largest crypto exchange by market cap joined the S&P 500 this week, a major development for a crypto industry that's historically been spurned by traditional financial markets. Shares of Coinbase increased almost 24% on the first day of trading before leveling off. And A16Z backs tokenized ticketing platform. Venture capital firm A16Z has led a $7 million seed round for KYD Labs, a Solana-based ticketing platform that allows users to bypass ticketing exchanges and artists to increase their distributions from sales. Well, it sounds like shitcoins, but it's probably a good thing. They should probably build it on Bitcoin. Next up from CoinDesk, this was posted on May 16th. Bitcoin adoption news, top win rebrands, SteakNShake accepts Bitcoin, and Galaxy's Nasdaq debut. Galaxy Digital just debuted on the Nasdaq, but it appears the financial services company's listing will be jostling for the attention of the crypto sphere's hive mind. Crypto X, still widely known as Crypto Twitter, despite the platform's name change, was abuzz with users sharing news of fast food company Steak and Shake starting to accept Bitcoin, payments over the Lightning Network having announced its plans to do so a week ago. A video posted on the social media platform shows a customer completing an order at a self-service machine, choosing the Pay with Bitcoin option and scanning the QR code with their Lightning wallet in the Zeus app. Another company raising the Bitcoin flag is Topwin International, a luxury watch wholesaler, which said it will change its name to Asia Strategy and manage its treasury and digital assets. It is in effect following the model of Michael Saylor's software company Strategy, which now owns 568,840 Bitcoin, more than 2.5% of all the Bitcoin that will ever exist. Hong Kong-based Topwin is partnering with crypto-backed venture capital firm Sora for its new pivot. Shares of the company rose as much as 45% before losing the gains to trade down 31% at $5.14. Sora previously worked with Tokyo-based Metaplanet, another company copying the strategy model. Galaxy, the Toronto-based crypto-focused financial services firm led by Mike Novogratz, has commenced trading on Nasdaq Global Select Market. Novogratz, who described the listing as a pivotal moment for Galaxy in a letter shared via email, rang the opening bell on the Nasdaq floor on Friday. Galaxy announced its plans at the end of last month, in which it also said Galaxy would remain listed on the Toronto Stock Exchange for a period of time following its intended listing on Nasdaq. Galaxy shares traded around $22.61 in early trading, 3.2% higher on the day. The Toronto traded shares rose 2.98% to Canadian dollars $31.48 or $22.53 US. Okay, next article's from CryptoRank. This was posted today. Bitcoin whale outflows. Over 17,000 Bitcoin exit exchanges in 7 days. Crypto whales are on course to a full recovery, driving market sentiments to new highs not recorded since January. Over the past week, centralized digital asset exchanges have seen massive whale outflows, signaling another wave of price momentum. This comes on the heels of strengthened institutional demand in Bitcoin and altcoins. On-chain data shows a spike in trader sentiment as long-term holders move assets. Aside from several technical indicators pointing to a full recovery, Bitcoin holders are poised to reclaim the 100K mark. However, several commentators have warned against lingering risks. In the last 7 days, Bitcoin whales transferred 17,000 Bitcoin from centralized exchanges to other custodians. As widely noted, this signals surging bull sentiments pointing to longer-term holdings. The large asset movement was also followed by a series of huge institutional buys reshaping the wider market. Data shows a bullish reaction from Binance whales in the last 2 weeks following the much needed White House tariff lifeline. These whales correctly backed a price surge below 80K to present levels. At the time of writing, Bitcoin's price jumped 12.3% within 1 week, showing strong momentum. Crypto trader Ali Martinez also noted that the digital asset leader is currently testing the yearly open above 93,500. Furthermore, the new trading volume on Binance hit a 30-day high above $62 million, highlighting fresh buying pressure. Analyst Crypto Dan cited important whale movements on the exchange, projecting positive whale movements. Recently, most people had shifted their view to a bearish cycle, and public interest had significantly decreased. Furthermore, with Bitcoin and altcoins in an oversold condition, the market has effectively shaken off the retail investors, which means the market is now ready for a rise. I've been continuously highlighting this point through my analysis. The cryptocurrency market in 2025 is still expected to show positive movements. After the massive rally in crypto prices this week, traders speculate a wider upward movement close to peak levels earlier this year. This remains dicey as the bull confidence isn't at those levels backing a fully fledged altcoin season. At the moment, Bitcoin's price trades at 104,586, while the market cap has soared 5% to $2.07 trillion. And Ethereum's up 11% as traders are keen on the $2,000 level, and XRP and Solana, blah, 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 don't care. Shitcoins. Next up from BitcoinNews.com, this article was posted today. Abraaj becomes first Mideast firm with Bitcoin treasury. Bahrain-based Abraaj Restaurants Group has made history by becoming the first publicly traded company in the Middle East to add Bitcoin to its corporate treasury. This is a major step forward for regional Bitcoin adoption. On May 15, 2025, Abraaj Restaurants Group, a well-known restaurant chain listed on the Bahrain Bourse, announced it had bought 5 Bitcoin as part of a new treasury strategy. This makes the company the first in Bahrain, the GCC, and the Middle East to officially hold Bitcoin as a reserve asset. This is a growing trend globally where companies are treating Bitcoin not just as an investment, but as a long-term store of value. Major companies like Strategy, Tesla, and Metaplanet have already done this, and now Al Abraj is following suit. Metaplanet recently added 1,241 Bitcoin to its treasury, boosting the company's holdings above El Salvador's. Our initiative towards becoming a Bitcoin treasury company reflects our forward-thinking approach and dedication to maximizing shareholder value, said Abdullah Issa, chairman of the Bitcoin Treasury Committee at Al Abraj. Al Abraj's move is largely inspired by Michael Saylor, executive chairman of Strategy, the world's largest corporate holder of Bitcoin. Saylor's strategy of allocating billions to Bitcoin has set a model that other companies, now including Al Abraj, are following. A photo shared by the company even showed a meeting between an Abraaj representative and Saylor, with the company calling itself the MicroStrategy of the Middle East. We believe that Bitcoin will play a pivotal role in the future of finance, and we are excited to be at the forefront of this transformation in the Kingdom of Bahrain. ISA added, to support its Bitcoin initiative, Abraaj has partnered with 10x Capital, a New York-based investment firm that specializes in digital assets. 10x Capital has a strong track record in Bitcoin treasury strategies and recently advised Nakamoto Holdings on a $710 million deal, the largest of its kind. With 10x's help, Abraaj looks to raise more capital and increase its Bitcoin holdings over time to maximize Bitcoin per share for its investors. The company will also develop Sharia-compliant financial instruments so Islamic investors can get exposure to Bitcoin in a halal way. Bahrain continues to be a leader in the Middle East in Bitcoin adoption, said Hans Thomas, CEO of 10x Capital. He noted with a combined GDP of $2.2 trillion dollars and over $6 trillion dollars in sovereign wealth, the GCC now has its first publicly listed Bitcoin treasury company. This is not just a first for Al Abraj, it's a first for the region. Bahrain has been positioning itself as a fintech hub, and Al Abraj's move will encourage more non-fintech companies in the region to look into Bitcoin. The company said the decision was made after thorough due diligence and is in line with the regulations set by the Central Bank of Bahrain. Al Abraj will be fully compliant with all digital asset transaction rules, including transparency, security, and governance. A special Bitcoin committee has been formed to oversee the treasury strategy, includes experienced Bitcoin investors, financial experts, and portfolio managers who will manage risk, monitor market conditions, and ensure best practices in custody and disclosure. The initial purchase was 5 Bitcoin, but Alabraj sees this as just the beginning. The company stated that there are plans in motion to allocate a significant portion of their treasury into Bitcoin over time. According to the company's reports, Alabraj is financially sound with $12.5 million in EBITDA in 2024. This strong financial foundation gives the company the confidence to explore new strategies like Bitcoin investment. Next up from bitcoinnews.com, this was posted on May 15th. Little deeper dive into 21 Capital becoming the third largest corporate holder of Bitcoin. Bitcoin-focused investment firm 21 Capital has made headlines after buying 4,812 Bitcoin, worth $458.7 million, making it the third largest corporate holder of the scarce digital asset. The move is big and public one towards becoming the ultimate Bitcoin investment vehicle, according to its leadership, and it's turning heads in both Bitcoin and TradFi world. Tether, the issuer of the world's largest stablecoin, bought the Bitcoin on behalf of 21 Capital. According to a filing with the U.S. Securities and Exchange Commission, on May 13th, Tether acquired the Bitcoin on May 9th at an average price of $95,319 per coin. 21 Capital was launched in April 2025 through a SPAC merger with Cantor Equity Partners, a Cayman Islands-based firm affiliated with Wall Street giant Cantor Fitzgerald. The company is backed by Tether, Bitfinex Exchange, and Japanese investment giant SoftBank. The firm is led by Jack Mallers, founder of the Bitcoin payments app Strike, who has been vocal about Bitcoin business models. We want to be the ultimate vehicle for the capital markets to participate in Bitcoin, building on top of Bitcoin, said Mallers in an interview. So we are a Bitcoin business at our core. At launch, 21 Capital had 31,500 Bitcoin on the balance sheet, with plans to get at least 42,000 Bitcoin. The breakdown of that initial allocation was 23,950 Bitcoin from Tether, 10,500 Bitcoin from SoftBank, and about 7,000 Bitcoin from Bitfinex, all to be converted into equity at $10 per share. The company is openly modeling its strategy after what Bitcoiners call Sailorization, a term coined after Michael Saylor, executive chairman of Strategy, who started large-scale Bitcoin accumulation by corporations in 2020. 21 Capital isn't just stacking sats, said Bitcoin advocate Max Kaiser. It's leading a generational shift in corporate capital allocation. Jack Mallers is taking the Sailor playbook and turning it into an arms race. The strategy is simple: use Bitcoin per share as a metric instead of earnings per share, prioritize Bitcoin accumulation over short term profits, and use the capital markets to fund purchases. Mallers said, "We do intend to raise as much capital as we possibly can to acquire Bitcoin. We will never have Bitcoin per share negative. Our intent is to make sure when you are a shareholder of 21, you are getting wealthier in Bitcoin terms." The Bitcoin purchase was made at a time of growing market momentum. On May 14th, Bitcoin hit $105,000 briefly before settling at around $104,000, a 7.5% gain in the past week. Retail buying has also picked up, with purchases under $10,000 up 3.4% over 2 weeks, suggesting continued bullishness. And finally, also from BitcoinNews.com, this article was posted on May 17th, and a little bit deeper dive into the Coinbase data breach and the $20 million ransom. What do we know? So, the KYC database of Coinbase, the largest US digital asset exchange, has been breached, and up to 1% of monthly active users, or around 100,000 customers, have had their personal information stolen. Ah, the centralized exchanges are honeypots. Hackers reportedly bribed overseas customer support agents and contractors to leak internal company info and user data. They then demanded $20 million and threatened to release the stolen data if Coinbase didn't pay. Instead of paying the ransom, Coinbase said no and is setting up a $20 million reward fund for anyone who can help catch the hackers. They then tried to extort Coinbase for $20 million to cover this up. We said no, the company said in a blog post. Instead of paying the $20 million ransom, we're establishing a $20 million reward fund. So, what's been stolen? The breach was first disclosed in a filing with the U.S. Securities and Exchange Commission, did not involve any theft of customer funds, login credentials, private keys, or wallets. But the hackers did get full names, addresses, phone numbers, email addresses, the last four digits of social security numbers, bank account numbers, and some bank identifiers, government ID images, driver's licenses, passports, etc., account balances, and transaction history, internal corporate documents, and training materials. Coinbase says Prime accounts were not affected and no passwords or 2FA codes were stolen. According to Coinbase, the attackers targeted outsourced support agents in countries like India. They were offering cash bribes in exchange for access to the company's internal customer support tools. What these attackers were doing was finding Coinbase employees and contractors based in India who were associated with our business process outsourcing or support operations, that kind of thing, and bribing them in order to obtain customer data, said Philip Martin, Coinbase's chief security officer. Coinbase said it first saw suspicious activity in January 2025, but didn't get a direct email from the threat actors until May 11th. The email had evidence of stolen data and the ransom demand. Coinbase quickly launched an investigation, fired all of the involved support agents, and notified law enforcement. It also started notifying users via email on May 15th. The Coinbase data breach has hit it hard, financially and publicly. The company estimates it will spend $180 to $400 million on security upgrades, reimbursements, and other remediation. Coinbase's stock also took a hit, dropping 6.4% after the news broke before rebounding. Analysts say this couldn't have come at a worse time, as Coinbase is about to be added to the S&P 500 index, a big deal for any publicly traded company. It's definitely an unfortunate timing. This may push the industry to adopt stricter employee vetting and introduce some reputational risks, said Bo Pei, analyst at U.S. Tiger Securities. Coinbase will reimburse any customers who were tricked into sending their digital assets to the attackers as part of social engineering scams. They've also introduced new security measures, extra ID verification for high risk withdrawals, scam awareness prompts, a new US based support center, stronger insider threat monitoring, and simulation testing for internal systems. Affected customers have already been notified, and the exchange is working with US and international law enforcement to track down the attackers. This is part of a larger trend in the digital assets world. Earlier this year, Bybit, another exchange, was hit with a $1.5 billion theft, dubbed the biggest digital asset heist in history. Research from Chainalysis shows over $2.2 billion was stolen from digital asset platforms in 2024 alone. Next, I wanted to highlight this week's featured post on the Bitcoin Fortress Substack. Articles entitled A Brief History of Financial Crises, Lessons from the Edge. So I will put a link in the show notes to that, as well as everything else I went over. And looking ahead at upcoming Bitcoin Fortress posts, I've got quite a few good ones coming up here. Bitcoin's op return, followed by what would the Austrians think of Bitcoin? Layers of the internet, layers of Bitcoin, Bitcoin adoption by US states, and a Bitcoiner's obligation. Fix the money, heal the world. Want to do a shout out for Fountain support at God's Death with 225 sats. Thank you, sir. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. With that, I will talk to y'all in 2 weeks because I'm taking a vacation next week. So hopefully you also are enjoying your summer as it gets started here with Memorial Day coming up. Talk to y'all later. Bye bye.